You are self-employed and you're wondering what mortgage options are out there. You heard, oh, hey, it's super hard for a self-employed buyer, business owner to get a mortgage. But is that really true? Here's a hint, it's not true. And in this video, I'm gonna break down a whole bunch of loan options you need to think about. 1099 loan, profit and loss statement loan, bank statement loan. Let's dig into all this. But first, so I already discussed it, right? You're a self-employed buyer looking to get a mortgage. What are your options and which one's best? You've done your research, you've seen what's up, and now you're wondering, hey, which one should I go with? Number one out the gate is a bank statement loan. It's a great loan. I've done them for years before even COVID and before they were popular, right? It's gonna take into account the deposits of your business based on the bank statements and then take a percentage of that, 50%, 70% of that or more for income to qualify for that. It's a great loan. I've done videos on this loan, and at the end of this video, I'm gonna give you another video on how I've closed 100% of my bank statement loans. So that's first, is a bank statement loan. I don't really wanna dig into that one because I've done a lot of other videos on it and I'll show you those, but I do wanna break down some other ones. There's a thing called a 1099 loan. Let's say you're paid a 1099. And you're filing your tax returns as a Schedule C or some other form, and you have a lot of write-offs. You didn't show enough income to qualify. Because keep in mind, when you're a self-employed buyer, in theory, your first option is, what's the income on the tax returns? Use that to qualify to get a conventional loan or an FHA loan. If you get denied for that and there's not enough income, that's when you dig into these other options. These options are not your first choice. That's your first choice. So a 1099 loan, you've been with the employer for over 2 years and you get paid a 1099. We're gonna be able to take that 1099 and use up to 90% of that income for you to qualify. What are some benefits to a 1099 loan? The rates and fees are gonna be very similar to a bank statement loan. It is gonna be less paperwork, right? A bank statement loan is gonna take into account the last 12 months of your business bank account or personal to figure that out. Here are the real workarounds that you can run into. If you have too many NSFs, so you've overdrawn that bank account, many times underwriting could deny that if you have too many. It depends on your credit score, loan to value and scenario, but that is something that could come up, is that you got denied because you had too many NSFs. I have a loan right now that we're getting approved and closed that another lender denied it because it had too many NSFs, overcharges. So you have that. If you are more cash heavy and you're not depositing into a bank account, that also makes sense to do it, right? Because the bank statements aren't gonna show that. If you were kind of, pardon my French here, but a little sloppy with how you were handling it, depositing some money, not depositing other, moving bank accounts, doing your personal bank account and then doing a business bank account, and then, over time making changes and back and forth and this and that, a 1099 loan can get around that. But the 1099 is going to need your year-to-date pay stub or ledger if you work for a larger company, or the most recent bank statements to back up those deposits in line with your 1099. Great program there. Something that could probably save your butt if you got denied for a bank statement loan. Let's talk about a profit and loss. Profit and loss is prepared by the CPA. Doesn't have to be professionally audited, just prepared by your CPA. So they had to have seen your tax returns. And the max loan to value there is 80%. So a larger down payment than, let's say, a bank statement loan or a 1099. This also works if, again, the same reasons why you had an issue with your bank statement loan or your 1099 loan, now with a profit and loss, you can do that, right? And so cash, moving bank accounts, maybe you didn't receive a 1099 or don't receive a 1099. That's another reason to do it. Both of these loan options require 2 years of owning your own business or receiving the 1099. The bank statement, you can be self-employed for 1 year if you've been in the same line of work for 2 years. So again, a lot of information in that video, maybe too many options for you to think through. So let's make it easy real quick. Your first option, showing your tax returns, it's enough income to qualify. You could get a conventional FHA jumbo VA loan. That's number one. Number two, a bank statement loan. Showing the deposits, do you qualify, right? And going down that route. 1099. Forget the bank statement loan, or it's too much work, or you ran into a snag, providing your 1099 and the things that I mentioned. And then your last option is that profit and loss. That is a little bit more involved. It may not be as helpful as all the other options, but it's good to know what options you have. That's also the same order for getting the best rate and terms. So be careful if a lender is like, well, let's just do this because it's easier, it's less paperwork. Hey man, I don't care about the amount of paperwork I gotta do for you. I wanna get you the best rate and best fees and lowest payment. So we're gonna put that work in, and we're gonna pre-approve a self-employed buyer in that order. First the tax returns, if not, we want your bank statements, then your 1099, and then maybe we go that profit and loss route. That was a long video about a whole bunch of mortgage options if you're self-employed, and I hope you found that information helpful. If you did, I'd love to be your lender. Call or email if you need anything, and oh yeah, sorry. Stick around for this next video where I talk about how I've closed 100% of my bank statement loans.